For the first time during the pandemic, rents are rising faster than home prices as would-be buyers get priced out of the market. Here with his outlook is Jon Ziglar, CEO of RentPath. Jon, welcome to the show. 2 years ago, rent prices were at bargain basement prices. What has changed since then? And do you think that rent prices have peaked?
Well, thanks for having me. And you're right. Rent prices have continued to go up throughout the pandemic, and we're continuing to see that occur. Right now, vacancies are at an all-time low across rental properties across the U.S., and rental prices for one-bedroom and two-bedroom homes have gone up on average across the U.S. between 16 and 21%. There's two things going on. One is you've got a lot of folks that are maybe being pushed out of the housing market as housing prices have been increased. You also have a lot more demand for rental properties, and the supply of rental properties has not been where it has been. Now, there's a lot more coming online in the next year or so, but I think that we're probably going to stabilize here for a while, and we'll continue to see this.
Jon, renters are paying so much more. What are they prioritizing at this point? Is it lower pricing? Is it location? What are they looking for?
I think it depends on a lot of things, and some you can sort of see in the data. Some would be anecdotal. Potentially one of the reasons for the increased demand of rental properties as a result of the pandemic is, perhaps you used to be in a 3-bedroom with 2 roommates, and now you really want to have your own place because you're at home all the time and you want more privacy. I think that a lot of it demand is around location. So you do see markets where rental prices are up 40, 50%, and a few markets where they're flat or down a little bit. A lot on the coast, coastal towns have seen a lot of rise. So I think a lot of it has to do with location, as well as amenities, as people start to be able to work more freely, work from where they want to be. So they're moving based upon that versus maybe where the job is.
Jon, the national eviction ban has lapsed, and now a lot of states are letting their eviction moratoriums expire. It happened recently in New York State, for example. What effect do you expect that to have on the rental market?
We have not seen a huge, there's not probably been the huge flood of evictions that folks saw. We were saying were going to come. I believe from the studies that we've seen, you've seen an increase in non-pay, as they would say. So that would be more of a pre-eviction action. But I think it really remains to be seen. We do have a very strong job market. You have a lot more jobs available than you have folks to fill them. Rates, pay rates have gone up significantly. So, one would hope that you're not going to see a significant increase in evictions because people are actually financially able to be, to continue to pay their rent, at least not above historical norms. We've been in a little bit of the last 24, 22 months have been, a different situation because you have had these moratoriums.
And Jon, as you see more people sort of migrating and sort of, they have the flexibility to move around for their jobs, are you seeing a rise in short-term rentals because people don't want to be tied in and they want that flexibility to get in and out quickly if they need to?
What we're seeing is a lot more property management companies enable more flexibility. So enable folks to be able to get out with less penalty, if they want to. I do think, and I failed to mention it, I think that want for flexibility is probably another reason for the increase in demand for rental properties. Because if I think I want to live in Denver for half the year and then I'm going to move to Miami or whatever, I'm not going to buy a home, right? I'm going to want to rent. I'm going to want the flexibility to move as I want to move around the country. And I think that also drives some of this demand. But I think what you will see is more flexibility in that, because that will become a sort of a key selling point for renters is, how long am I stuck? Can I move? And we've seen in a few cases where the property management companies have been able to charge a little bit more on the rent because they're giving more flexibility on the ability to get out early.
And I know that RentPath, John, was recently acquired by Redfin. Just curious what kind of growth your company has personally seen during this time and plans, maybe expansion plans here in the new year.
Sure. So, RentPath is actually started with Apartment Guide, if you remember that back in the day, but really created the category around being able to aggregate all the rental properties for one place for consumers to be able to find it. And our focus is really on two things, which is on helping people find a place called home, be that a single family home, an apartment, a condo, doesn't really matter to us, and do it simply and easily. And on the other side, to really help property managers and landlords fill vacancies efficiently and easily and lower friction and be more profitable. We've seen a lot of growth in demand in the last few months. Interestingly, you've had a situation where vacancies are so low that landlords have been less worried about filling vacancies. So the demand for certain things that we do has not been as high. I think we see that coming back right now. But you have much greater turnover of folks as they move around. And so that need is still there. Our goal really as we move forward is to continue to build out the suite of marketing and engagement services that we provide for property managers that make it easier for them to attract, engage, sign, and then manage those tenants in those properties.
All right, Jon Ziglar, CEO of RentPath, thanks for your insights today.